Hi, this is Joe. I'm going to take a quick look at the S&P 500 index today, and then I'm going to go through some stocks that were individual stock requests I received. I want to explain how I look at stocks, and I want to show you how I go about reducing the list of ideas down to a workable few. There's a lot of different characteristics I'm looking for, but it might enlighten you as to, if you're looking at 20 names, how to bring it down to maybe 2 or 3. Before we get going, please hit that like button if you enjoy this analysis. We're going to start real quick. I'm just to make sure you just have to do your own due diligence on the stocks you're interested in. There is a high risk to trading, so you need to do your own work before investing your hard-earned dollars. Let's get into the charts, and before I do that, let's just start. I've got an S&P chart here with 4 time frames, and I just want to make sure that I'm stressing how I go about the analysis. The bottom left here is the monthly chart, then bottom right is the weekly, top right is a daily, and top left is the hourly. I highly encourage you to figure out a way to get 4 charts up at the same time. It will change how you look at the market. It'll change how you analyze stocks. And if you're doing multiple time frame analysis, which I believe gives you a massive edge, you really need to have a software program that'll allow you to put multiple charts up at the same time. Most will allow you to do it now, but I would just stress to you that if you're looking at one chart at a time, that you're making it much more difficult on yourself. And I think it's a lot easier to see where the pockets of support and resistance are, what your potential upside is, and really whether you have confluence amongst all the different trends. So just want to make sure I mention that. Let's go into the S&P now. So again, the monthly chart's in pretty good shape. We're about up towards this prior high. I had mentioned that in the prior video that, we're coming up against this prior peak. I think we're going to try and exceed that, and we're going to be overbought when we get to a new high. So I'm not a huge fan of breakouts from an overbought condition. So that was what I had brought up in the last video I wanted to follow up on. But it still looks like the market wants to push higher here. We can see the weekly chart, kind of climbing. The daily chart has shown some signs of improvement, especially on an ADX basis. The ADX has crossed over 25. It's up to 28 and change. And as I mentioned last time, there's definitely improvement in the DI. The buyers showing a little bit better strength. And then what I would tell you about the hourly chart is that this trend is getting a little long in the tooth. I mean, it's been going up for several days in a row. We're probably due for some type of a consolidation or pullback, but it wouldn't surprise me if that takes place after we go and nick a new high, maybe go break to a minor new high, and then see this go through the type of consolidation after the long run that it's had. So you always want to look at the lower time frames to help you identify how mature a trend is. In my earlier videos, I talk about, the longevity of the trend, right? How long has a trend been in place? Because the longer it's been in place, the higher the risk of some type of a correction or pullback. So you want to be aware of that. Let's start going through some individual stocks, because I think it'll be interesting. So I'm looking at AT&T. If we go and look at the monthly chart, I mean, the first thing I want to point out is there is pretty substantial support underneath here. And then if I look overhead, I see, some pretty decent resistance up in here. So I would classify this as a trading range. And if you notice, the 18 and the 40 in the monthly chart are really more sideways, slightly down, but more sideways. They're just not doing a whole lot. The weekly chart actually has a pretty good separation between the 18 and the 40. And it looks to me, based on what the MACD is doing, that this might want to try and rally. But from an interim resistance standpoint, I know that my target is going to be somewhere in here. So if I'm going to trade this, I have to try and get it down on a small enough time frame so the risk reward makes sense just for a target up to like 32, 33. So, I mean, yeah, I think there's some signs of improvement here based on what's taking place on the MACD and the fact that this is holding the weekly 18. But I don't know if there's a huge enough, really a significant enough upside to really want to play this game, unless again I go down into a smaller time frame, something like the hourly. Let's look at the XLU. So the utilities have shown some signs of improvement. You can definitely see that, but we have a little bit of what I call like, turbulence, like problems up here. We've got the 18-month it's trying to work through, but there's some price resistance up at 62, 63. Again, we're looking at another low ADX pattern on the daily, and it is possible this might want to try and push up a little bit higher, but just recognize the fact that we're really got some problems overhead. So you just have to recognize that it's probably not the type of situation where it turns into some kind of a powerful trend. It's more of a trading type of a pattern. You could probably make a little bit money as it works its way higher here. Let's take a look at GE. GE has come down, it's rallied up, and then come back down again. And again, there's the fact that this didn't hold this low from 2018, it's severely underperforming the market. And yeah, I can see this starting to try and gather itself here. And if you notice, the MACD is holding its signal line on the monthly chart, and it's also holding its signal line on the weekly chart. And it is hugging this 18. So I could see some signs of potentially seeing this trying to work up towards resistance here. But you have to keep in mind that this is a stock that's just dramatically underperformed. I would probably want to see more strength come into this and sort of prove itself, and then look to buy the first pullback. So I'd probably be watching for this to work up towards 8, 8.5 with some strength, and then pull back towards the 7.5 area, something like that, and then look to make the play. I want to make a pretty specific point though. So when I'm looking at stocks, let me just draw this out, because I know this is a crude way of doing it. I didn't really plan on doing this, but I think it's really important. So if a stock is turning around, actually, let me do one more thing. If a stock's been down and it's turning around, like, I don't really care about this first leg off the low. I'm not trying to be a hero and buy at the bottom. And I'm also not necessarily, let me switch this. Let's say we got a big, huge move to the upside, and then it tops out. So what I'm trying to do is I'm trying to identify the middle 80%. I'm not trying to buy the bottom, and I'm not trying to sell the top. I want to take advantage of the middle part, the high probability part of a trend. I want to know that the trend is turning, and then buy pullbacks, and then try and participate as long as it seems like, the trend has good momentum behind it and the characteristics are good, or there's no huge resistance overhead. So I'm generally going to be in this zone here is where I'm playing, and I call it the middle 80%, because I'm not going to worry about the bottom 10 or the top 10. I'm just trying to take advantage of when I have a trend in my favor, and I want to catch that move that is the high probability part of the move, not the low probability. Try and catch the low, and not try and pick a top. I'm just trying to catch the part where that I think is just really higher probability. So I just want to make sure you understand that. So let's take a look at Clorox is trading. It's one of the virus stocks, right? I mean, it's trading like you could almost call it like Zoom. The way it's been trading, it's just been very strong. They can't keep their products in the stores. So, I mean, that's taking advantage of the environment in a way. That's what's happening to the stock. I think it's a little long in the tooth in the near term. You've gotten stretched away from the 18-month line. You're not as far away from the 18-week line, but it is a pretty, it's made a pretty big move. The daily chart is still in pretty good shape. So if I were in here, I'd probably be okay with holding it, but I think it's a little too late to be considering a buyer. If the stock decides to make any kind of a vertical move from here and gets that 18 sort of jumping away or moving up at a faster rate than the 40 on the daily chart, then I would probably be looking to exit. So let's look at Zendesk. ZEN is the symbol. And notice how on the monthly chart and on the weekly, you can see how this attempted to break out and failed. So if we go back and talk about what I mentioned on the S&P, notice what happened here. The stock was up for 1, 2, 3, fourth month. In its fourth month, after making a move from $50 up to basically almost doubled, it tried to break out. So this is what I'm talking about. When a stock tries to break out from an overbought condition, you tend to have some type of a reversal or some type of consolidation. One other thing of note is the $100 mark. These big round numbers at 100, 200, 300 are very, very important to watch. And when a stock is overbought running into these big round numbers, you want to be aware of it. And they're actually good times to take a profit. I would probably avoid this for now based on the way it's pulled back and topped up there. I think that's created some resistance overhead at this point. If we can work our way back up through this breakout area, then I think I'd get a little bit more interested. MU is sort of caught in a little bit of a range right now. We've got pretty good support underneath here, and we've got some pretty decent resistance overhead up in here. Now, I do like how the ADX is, we got a low ADX pattern kind of developing here, but there's just nothing going on until we get back up through, say, 54, 55. So when you have low ADX, you want to wait for a breakout. If you're looking at a stock that has a strong trend and the ADX is high, you want to buy pullbacks. Those are the two things I want you to remember from this video if you remember anything. If you have low ADX that's been low for a while in any specific time frame, draw trend lines on price and wait for a breakout. So I'd probably be drawing in a trend line here. And I'd say, you know what, I'm not doing this in a low ADX environment. I'm not buying inside of a range, because I want to wait for price action to show me it's getting ready to do something meaningful. So you always want to draw trend lines on price and wait for a breakout when ADX is low. And when it's high, you're already in a trend. You want to start looking for a pullback in those scenarios. This MongoDB is in the process of pulling back now. It's gotten a little sloppy, especially if you look at the daily chart. It had made a pretty nice move, and again, the trend was somewhat mature here, and then it was trying to go through the type of ABC consolidation where the 18 would cross down below the 40, and it never got there. Now it's doing it, but it's doing it in a way that makes it a little less attractive to me, because we're taking out this support area. So I'm inclined to think we're breaking the 18-week. The MACD is kind of rolling down through its signal line. This is probably going to take a little bit more time. I don't think there's any rush, but there's some pretty significant support underneath 185, 190. So I don't think there's significant downside. I just don't think there's any rush to be a buyer. Let's look at Arrowhead Pharmaceutical. So we are pulling back here. I don't know. Something that bothers me about this is the way it's pulled back. It's a little sharper than I would like to see. We're pulling back to the 18-week now. If you look at the monthly chart, we had this huge move to the upside, and then it gave back a huge amount overhead. And then it tried to rally up, and then you got a round number at 50, and you failed there. So I'm just kind of looking at this thinking it was a little too sharp in the way it pulled back, and I think there's some resistance now at 50, at least for now. I think it's probably going to spend some time, working sideways. SMAR, just a little bit too much damage on this pullback. Again, you had a failed new high after it got overbought on the monthly chart and the weekly chart. You can see you made a move from, say, 30 up to almost 60. And again, it was overbought on the breakout. So this is the other thing I want you to remember from this video, is that if you break out from an overbought condition, there's risk in that. You don't really want to be buying breakouts after a stock has made a pretty decent move. The way to recognize it is how far away you are from the moving average. So I can see here that, the 18-week was way down at, say, like 47 or 48, and the stock was breaking out at, say, 58. So it had a 10-point difference between those two levels. Anyway, I don't think there's any rush, especially you can see the trend on the daily is down. In fact, we had a sell signal using a daily chart with the 18 below the 40 and both lines declining. And then if you notice, the hourly chart had the opposing trend trigger that you would have triggered you in on this bar going down here. ANET, again, what I don't like about this, so there's things developing on the monthly chart like it's trying to improve, but you have flat moving averages. You don't really have a trend on the monthly. And then you were trying to get going on the weekly chart, but it was a sharp pullback. A little too violent, I think. I do think there's improvement taking place in the bigger picture here. I mean, we're breaking the trend line. We're trying to turn things around. We kind of have a little bit of a 1, 2, 3 going. But again, now that the trend is up, I would go to the daily chart and look for a pullback. And, I would tell you that is just too violent with the gap. I think this is going to take a while to recover. There's probably pretty good support at like 210, something like that. But we're going to come in and probably be more of a waste of time than anything. PANW is trying to break out. But again, it's sort of a little bit overbought. Not as bad because it did pause here. I think this is somewhat interesting. I'd like to see, again, maybe just a minor pullback or something like that. And then if it came up through the breakout area, that would be pretty intriguing to me. Massey has made a big move on the, look at the monthly. So this is a pretty mature trend on the monthly, and you're pretty far away from the monthly 18. So you have pullback risk on this time frame. And it looks like the weekly trend is starting to, make up for that. You've got a break of the MACD line through its signal line. You're kind of going through a corrective process, and you're breaking the 18. So I wouldn't be surprised if this spent a few more months now just consolidating and allowing this 18-month to catch up. Maybe it meets up with it around 200, something like that, and sometime in the next month or so. Duke, somewhat similar to the action in the utilities. A little bit more of a range trader right now. Pretty good support. Oops, pulled up the wrong thing. So pretty good support at 80 and some resistance at 90. Let's take a look at IWM. So an important factor in IWM is that this just recently took out this resistance area here. It had been sort of sideways, and I had mentioned in a prior video that we had this kind of sideways action taking place inside this area. Now we're getting through that. So I wouldn't be surprised if the next target area isn't 168, something like that, kind of going back up towards the old highs. We had a low ADX pattern, and you are breaking out. Again, go and always look at the lower time frame and just make sure. If you notice, we've made a pretty big move. So look for some type of a retracement here. If you're interested in playing this, we know the breakout area is around 153. Call it 153 and change. If you can get a pullback a little bit closer to that, or one of the patterns that I talk about, like the pullback where the 18 crosses down below the 40 and we get the opposing trend going, then you can trigger yourself back in on this stock. It's probably on this ETF. This is probably something to watch because the Russell, I think, I've done a lot of studying this over the years. If the market's going to do anything meaningful to the upside, the Russell's got to kick in. I think we have to see it outperform. Most periods going back the last 10 or 20 years have been when we've had strong periods to the upside. The IWM or the small caps tend to outperform during those periods. So this is my update on the market and going through these individual stocks. Please hit the subscribe button, and please keep sending any stocks you have an interest in going through. If you want to see this type of analysis, please feel free to send it along. All right, thank you.